Hi guys. So I want to explain to you guys the similarities between these concepts on my screen because in most cases, I think 60% of most traders uses one of these concepts on my screen. Now, why do I call them concepts? They are concepts because it only becomes a strategy when you start using maybe one or two from these concepts and you use it consistently. That is when it now becomes a strategy. But as it is right now, this is just a concept whereby we are looking for an area because all these concepts are just an area on the chart where we are looking to buy or we are looking to sell. So these are just areas on the chart. Now it now depends on the kind of trader you are and the kind of areas you want to be looking for, you know, to buy or to sell. Because basically, what is the job of a trader? We don't have any other thing we do except buying a currency or selling a currency against another currency. As simple as ABC. There is nothing more that is required of a trader than to buy and to sell. Now, how do we buy and how do we sell? Now, this is why these concepts are there for you to, try to look for the ones, maybe one or two that works very well for you over time, the ones you've practiced, the one you've back tested, and you can see how well it works on the chart and how fine it resonates with you. Now, what are these concepts? We have the previous section high and low, we have the previous candle high and low, we have the fair value gap, we have the order block, we have the Fibonacci retracements and the extension, we have the breaker block, we have the swing high and the swing low, and we have the market structure. Now, all these concepts are just an area on the chart and they all serve as a support and resistance. Honestly, I keep saying this thing. Basically, what we do on the chart, every one of us, is this either we are trading support and resistance. When your support becomes your resistance and when your resistance becomes your support. That is basically what we do because these are the areas where we want to, try to buy and try to sell. Now, for you to now, have a very good probability in the market, you need to add at least one or two of these concepts together and see how well it works. You don't need to know all these things. You don't need to use all these things on the charts. You don't need to just keep, bouncing from, today you use a previous section high and low, then tomorrow you are using breaker blow from. No, try to understand the areas where price always reacts very well from. Now, all these concepts are just areas. The moment you understand this thing in your head, it will reduce a lot of pressure on you because I know many traders are confused out there, thinking maybe they have to know all these things. Honestly, you don't need to know all these things. It is basically not necessary for you to know everything. All you just need to know is pick one or two of these concepts, then try to see how you can match them together and see how well it works for you. Now, some of these concepts works very well for swing traders, some of these concepts works very well for day traders, and some of these concepts works very well for a scalper. Now, some of these concepts as well are liquidity based concepts, especially now the previous section high and low are liquidity concepts, are liquidity concepts. The previous candle high and low is also a liquidity concept. Then the swing high and low as well, it is also a liquidity concept where these are areas where we are looking for price to either sweep that area or to break it. Then maybe you can add your fair value gap or your order block to it just to make sure that your confidence on your probability is high. It's as simple as that. It is as simple as that. So just look for one or two concepts from this list and find a way you can get better in it and be consistent and follow it religiously. Make it your strategy. Let it resonate with you. That is when you now start enjoying trading, because you already understand that, okay, this is the area where I want to be attacking price. Okay, I want to be attacking price on my swing guy, on personally. I use my swing guy and my swing low. That is what I do. And also fair value gap. Now, for instance, let's take for instance, this is my monthly, maybe a monthly swing eye right there. Now, what do I want to do? Once I've been able to understand my bias and understand what I'm trying to do, now this monthly swing eye becomes my area where I want to be looking for price to react from. Now, the next thing I want to be doing is going to the daily time frame on this monthly swing point. And what do I want to be seeing on the daily time frame? I want to see price coming into this level, sweep this area, then probably create a fair value gap around this area for me on the daily time frame, then target the fair value gap from that area, then continue downward. This is basically everything I do. Now, with a little bit of market structure, because market structure will just let you have more confidence of maybe there is a market structure shift and all that. That is just the purpose of the market structure in my own way of trading. So I use my swing high and my swing low as an area where I want price to get to and start reacting from. Then from that monthly swing high, I move down to the daily time frame. And what do I want to see on the daily time frame? I want to see a sweep from that monthly swing high on the daily time frame. Then price creates a fair value gap towards my bias. As soon as price creates a fair value gap towards my bias, I wait for price to respect my fair value gap and also uses a swing point on that daily time frame. Now, this is just mechanical. It is not that difficult. These are just mechanical where you need to be very, very careful, and it requires you to keep practicing, because you can never be a good trader by watching YouTube videos. You can never be a good trader by watching YouTube videos. You need to put in that energy, you need to put in that hard work as well. You need to put in that spirit to keep, practicing, backtesting, and understand your concepts before it now becomes a strategy for you. So this is what I said I should explain to you guys. If you are confused on all these concepts, these are just areas on the chart. It's not a strategy, it is a concept where we are looking to buy and to sell. And they all act as a support and resistance. That is just the truth. All these concepts are support and resistance, just in a different name. We have the supply and demand as well. I didn't write that. I forgot to write that. The supply and demand as well.